Hello traders and welcome to the third video on the candlestick patterns and how they worked in the real market. This is a chart of Australian against the US dollar. So we are just going to go from the left to the right and analyze some candlestick patterns. So let's start from here, from this part of the chart. We are not going to look from the to the left of this because there are no clear support and resistance levels, something that we are looking for right now. So first here is a bullish engulfing candle. This green is engulfing this red candle, so support is formed and the market breaks again, closes up here, and another bullish engulfing. So back-to-back bullish engulfing patterns like this are an important indication that a bottom is in place and the market is going to move higher. So at this point we have a resistance here, although not very strong, but it's resistance. So the market goes up, and here is an inverted hammer or a shooting star pattern, which is a clear bearish signal, a quite strong bearish signal appearing at resistance. So guys, what do we do here? Well, you could have sold here absolutely perfectly fine, 70 pips stop loss, probably targeting down here at least 100 pips. Perfectly fine to sell here. However, look at that, it didn't work. Yes, it happens. Candles don't always work. So probably you would have been stopped out here because your stop would be above this high most likely, or if not here on this candle for sure, but better to be stopped out somewhere in this level than wait for the close up here, of course. This is the Brexit candle. So probably it was smart to not trade 3 days before Brexit anyway. Even that there is a candlestick signal. So during such big fundamental announcements, it's sometimes better to stay away from the market. So anyway, a market falls, and here we get a piercing pattern, which is a bullish pattern, the equivalent of the dark cloud cover in the bullish scenario. So at support, piercing pattern, clear signal to go long, and if we did that, of course, we would probably not stay all the way up to here as we get all those red candles, and this is a dark cloud cover and another dark cloud cover, so probably we would get out here because we will get too scared, which would still give us some profit of 100 pips, not that bad anyway, but the market decides to keep moving up. No sale here, although you could on the second one because there is a back-to-back dark cloud cover pattern, two dark cloud covers one after the other, but dark cloud cover is not as strong an indication as an engulfing, a bearish engulfing candlestick. So let's say whatever happened here, the market we move on with this example. Even if we sold, probably, of course, I mean, you would have lost, and anyway move on. So this is the interesting part: resistance, bearish engulfing candlestick. At this point, clear sell signal, sell it, targeting this support zone, exit here, 115 pips, perfectly fine trade, bullish engulfing, can go long, and place the stop 2 points where you can place. You can place it here if you are too scared or if you don't want to risk this much, but the more appropriate level would be this one, as this is the lowest low of this support zone. So you could have a gun long here, and on this point of the chart, you would not be stopped out. Well, if your stop was here, you would have been stopped out maybe even on the next day. So at this point, there is evident there it's clear, it's very evident that there is a basing process, a support forming, a base is forming, and that the market will move higher. Plus we have this uh, support trend line after that, that is more evident on the 4-hour chart, of course. So clear signal to go long and target this resistance area, although the market did close above it before reversing on a even on an evening star candlestick pattern here, and then a bearish engulfing and another bearish engulfing, and then it falls. So same here, same thing here, guys. Although this is not quite an inverted hammer, this is not quite a or let's say we could count it as a piercing pattern, and even a morning star, because the morning star needs to close more than half into the red real body, which here it seems that it's exactly at the half of the red body. So again, a candlestick pattern at support at the same support area, and the market goes up again. So yeah, that's another example of how to use candlestick patterns in combination with classical support and resistance levels, and hopefully that gives you more clues on how to read the candlesticks yourself. Of course, go to your charts and do this yourself. Go back in time, try to analyze, try to read the market, and of course, after some time, you will get much better in it. But much better at it, and you will be even able to anticipate future price movements. So thanks for watching this video, guys, and I'll talk to you in the next video.